Well, it's a little bit premature to say it was abolished, still with us in its dying days. Basically, I think it's very much on its way out. There will be an announcement as to when the new tax will come in, and we expect it will happen before the end of this calendar year, but it is still with us for now.
How will the new dividend tax work?
I think that some of how it works we knew already. It'll be a tax imposed formally on the shareholder, but withheld by the company, the same as STC also was withheld. However, it has answered some of the unanswered questions around transitional measures, and specifically the STC credits and how those will be used. And there's certain very specific rules in the draft legislation, which I think companies need to look at carefully. Essentially, you will still be able to use the credits under the new system for a period of up to 3 years, but it is subject to certain specific limitations. So at least you don't forfeit the credits altogether, because that could have precipitated a whole flood of declarations of dividends, which obviously is not ideal.
Yeah. There's a significant gap between the individual and corporate tax rate, and the legislation introduces the new concept of passive holding companies, which is designed to address tax arbitrage, which takes advantage of this gap. Can you tell us how do these passive holding companies work?
Yeah, just to speak a little bit more broadly first, last week we discussed the issue of the labour broker rules, the personal service company rules, which are now being replaced. That's probably the most common form of tax arbitrage that we've seen. But there have been two key factors that could cause that to increase. One is the fact that STC is now levied on the shareholder, not on the company. So potentially, if you can use a corporate entity rather than an individual, you can avoid STC, obviously only until it comes out of that company. And secondly, of course, the rate of STC is lower. It's 10% as opposed to 12.5%. And this year we saw a cut in the corporate tax rate down to 28%, with no corresponding cut in the corporate and the individual tax rate. So for all those reasons, that potential for arbitrage is greater than ever. And then just to go on to your question, basically these passive holding companies are vehicles that are designed only for tax purposes, and essentially what the rules do is impose the same consequences on them as would have applied to an individual. So the income is taxed at 40%, and distributions to them is subject to to the new dividend tax up front.
Okay. Now we look at the small businesses, and we often see that government is eager to assist small businesses. For an example, we look at the recent legislation of the small business tax amnesty. But we notice that compliance is still extremely onerous. We see, however, that there's a new legislation being introduced, well, a new tax called the Small Business Presumptive Tax. Can you tell us a bit about this?
Yeah, I think your point about the burden on small business is very important, because, you know, the amnesty said, well, here's a chance to come clean, but the problem was that going forward you then had to comply. They gave you amnesty across the full spectrum, VAT, PAYE, corporate income tax, but of course then you had to actually comply going forward, which is tough. So this new measure has to be seen again in conjunction with the raising of the VAT registration threshold to $1 million, and essentially this new small business presumptive tax, which is based on turnover, is a percentage of your turnover. It makes life much simpler, and you might not have to register for VAT.
Okay, thank you, Billy. If you need any information about this interview, please take a look at the next issue of Tax Talk, or you can phone Tax Talk on 0861 829 825. Until next week, goodbye.